What are some signs to look for when considering buying small cap stocks?
Coming together for the first time. We're emerging from a pretty terrible inflation cycle that was, crushing for smaller companies, especially their ability to raise prices relative to larger companies. And it's coming at a time when the Fed is about to make a pretty abrupt move to being supportive of the business cycle instead of fighting inflation. And on a valuation side, small caps are trading at 44% of the price to book of large caps. That's exactly where we were in 1999, and that was the launch point for 12 years of outperformance. So I think when investors start to allocate to stocks and the Fed starts to be visibly cutting, I think the Fed is not clear when they start, but when they start, I think it's going to be a big tailwind for small caps.
Small caps are trading at a low price to book ratio compared to large caps, similar to 1999, which was followed by a period of outperformance. When the Fed starts turning dovish and is visibly cutting rates, it will act as a significant tailwind for small caps. On average, small cap stocks tend to perform well during economic recoveries. When the economy rebounds, unemployment rates decrease, and businesses experience robust earnings growth, it becomes a favorable time to invest in small caps.
One of the areas that I would like to advocate for are small caps, because if you look at the dispersion between the valuation and small caps today, you've got one of the biggest opportunities, I think, going back to the 1990s. And one stat that I'll share is that if you go back to the October lows of just last year, small caps are up 25%, but the S&P is up 22%. So the small cap index is actually beating the S&P 500 off the October lows.
Small cap stocks often outperform during young bull markets when stock prices are rapidly rising. For instance, since March 18, 2020, the Russell 2000, which tracks small cap stocks, has outperformed the larger S&P 500 index. History shows that small cap stocks rally before a clear economic rebound. The current uncertain economic environment presents a highly opportune time to invest in small caps for the long run, especially as we emerge from the high inflationary environment. Small cap companies often have more room for growth compared to large cap counterparts. Their agility allows them to adapt quickly to changing market conditions and capitalize on emerging trends. Historically, small caps have traded at lower valuations relative to large caps. Investors seeking undervalued opportunities may find small cap stocks appealing. Smaller companies receive less analyst coverage, leading to potential market inefficiencies. Diligent research can uncover hidden gems that are overlooked by the broader market. Larger companies often acquire successful small cap firms. Investing in small caps can position you to benefit from potential buyouts or mergers.
Most people are sort of running from.
They are running from small caps. I do like them. I think we've had an unusually high increase in interest rates. That has had a negative effect on the smaller companies in the United States and frankly around the world, in Europe as well. And when those interest rates moderate, small caps are going to fly, and they're significantly undervalued, and people should look at their portfolios and make sure they've got some allocation to it, because they're very under-allocated.
Including small cap stocks in your portfolio enhances diversification. Their performance may not always correlate with large cap stocks, reducing overall risk. Small cap investments are better suited for long-term investors. Over time, their growth potential can yield substantial returns.
Go to some stocks that you do like. One is Atlas Energy, $2.4 billion market cap, priced at $17.30, an oil field services company. Why do you like it?
Yeah, and today's a little bit cheaper with energy coming in. So this company just went public beginning of this year. They basically transport and produce frac sand in the Permian, a very good area. So when they do this, it's basically a logistics company that has autonomous trucks, and they're going to reduce transportation costs by 90%, emissions by 50%. But more importantly, when you drive on these very difficult roads in the Permian, it's going to reduce fatalities. So they have a 42-mile conveyor belt system called the Dune Express. Just spoke to the company about a week ago, and CapEx is right on track, so I like that. And this is one that I think is just completely differentiated from the competition, and one that we would own for the next 3 to 4 years. Yeah, I like pool because it's pulled back. They obviously had a great tailwind in COVID when everybody was spending money on their backyards and their swimming pools. But what people don't realize, it's about 2/3 of their sales are just boring repair and maintenance of your swimming pool. So it's more boring than people think. So I like that one a lot. And then Palomar, just an insurance technology company, should do quite well, growing quickly and trades at less than 15 times earnings. So again, a fast-growing company that people just left for dead because it's not a sensational 7 stock. At some point, people are going to find this one, and it's going to, that multiple is going to grow into it.
Be sure to like this video and subscribe to my channel for future videos.